My name's Miles Pitcher. I'm the owner of Superior Lending. I've been in the business 21 years now. We love helping our clients find the right loan product for their situation. And that fits exactly with today in understanding the FHA loan and where it is the right situation for it to be the right loan for the client. Let's start out today talking about FHA, Federal Housing Administration. Many people think that that means first-time home. You do not have to be a first-time home buyer to do an FHA loan. Some of the cons of doing the FHA loan, we'll start going through these, are, first of all, the big ones that people bring up all the time are the upfront mortgage insurance premium and the monthly mortgage insurance. Let's talk about those. Upfront mortgage insurance premium is a upfront fee when you close the loan. Typically, it is rolled into the loan. You can pay it if you want with cash out of pocket. I very rarely see that happen. Most people roll it into their loan amount. Right now, the typical upfront mortgage insurance premium is 1.75%, though we have heard rumors of that being reduced here in the future. The other part of that is monthly mortgage insurance, monthly MI. And this is good and bad with FHA because with FHA, it is a flat rate on how much is charged, or a flat percentage. In a conventional loan, it moves based on how much down payment you do and where your credit score is at, the zip code you're in, and how many borrowers there are on the loan. With FHA, if you have a 600 credit score or an 800 credit score, the mortgage insurance percentage or factor that you're using is the same. So it's good and bad. We kind of put a dividing line about a 680 credit score. If you're below that, FHA is your spot. If you're above that, conventional is probably going to be your spot for the loan that you should do. The other part of that is that monthly mortgage insurance that you're paying can be permanent as long as you have that FHA loan. And the deciding factor there is if you put less than 5% down payment, you're going to have permanent mortgage insurance on your loan as long as you keep that loan. If you sell the home, pay it off, or refinance and get out of it, it's not permanent. One of the other knocks on FHA is the condos. Condos have to be FHA approved in order to do an FHA loan on them. And that can be a serious pain in the rear. However, just recently, they have now allowed for spot approvals on individual units within a condo project. And that's super helpful, that's super nice. It does add some time to the process. So if you have to close quick, don't count on getting the spot approval done on that FHA condo unit to get it approved. The other part of FHA that happens is they determine by county zip code a loan limit. So if your loan is above that amount, sorry, you can't do an FHA loan. They also increase by the number of units that you are doing. So single family, duplex, triplex, fourplex, the loan limits all increase with those. And I'll throw a link to where you can check your county and see how much your loan limit is where you are at. Now with sellers, the FHA sometimes really gets knocked on and discouraged. Why is that? Well, first and foremost, they believe that the appraisals are more picky on an FHA appraisal. And in many ways they are. For example, on a conventional loan, man, they're not looking at the roof. They're not climbing up on looking at it, but with a FHA they are. FHA, they're looking for chipping paint or peeling paint that they will call out and say that needs to be sanded and painted over. If there's exposed wires or the wall plates are missing off of light switches or electrical outlets, if there's missing flooring, if there's handrails missing or steps missing, FHA calls those out. They just want to make sure that the borrower is protected and that the collateral for the loan, the home, is in good condition. So we really talk with our sellers as we work with them and just say, hey, is this home in FHA good condition? And if it is, then there's no need to be afraid of it. The other part of an FHA transaction that sometimes scares sellers is what they call the mandatory clause. It is a form that has to be signed by the buyers, the sellers, and both agents that basically says if the home does not appraise for what the purchase price is, that the earnest money can be refunded or is required to be refunded back to the buyers. So another thing in there, if you need help on that or have questions on that, we have some ways of working with that make the sellers much more comfortable with that. Another con with FHA, and it's not a huge one, is that they treat student loans differently than conventional loans. And so if your student loans are in forbearance and you're not paying on them, they will take the loan balance and take 0.5% of that and count that as the payment on the student loans. Whereas with conventional loans, there are ways that if you have an employer who pays your student loans, or they can be forgiven once you have so many years in your job, like you work for a state agency, or you're in an income-based repayment program, conventional is a spot for you. FHA does not like those. Let's move to the pros now, and there are a lot of great pros on the FHA loan. First and foremost is it is a low down payment program. 3.5% is the minimum down. That's awesome. Part of that also is the FHA loan can be very easily paired with a community grant or a down payment assistance program. Totally great to do that. My favorite features of the FHA loan are that they allow for low credit scores and they allow for high debt ratios. And let me tell you a little bit more about those. So like I mentioned before, typically if you're above 680, I'm going to look at taking you to a conventional loan. But 680 all the way down to 580, we can get a regular normal FHA loan done for you. Now 579 down to 500, we can still do an FHA loan, but you're going to have to show up with a much larger down payment, usually around 10% to get that done. Debt ratios, or DTI, this is a measure of how much of your gross income, let's say you make $10,000 a month, goes to pay your monthly debt payments, like your car payment, credit cards, student loans, and what your new mortgage payment will be. So those get in, we measure the percentage of it, and that's a critical piece of getting qualified. With FHA, they will allow us to go to a much higher debt ratio than we can on conventional loans. I have some clients right now that I'm getting ready to close, and we have them approved all the way up to 56% debt ratio, which is pretty phenomenal. Another great feature of FHA is there is no income limitation on it. There are some first-time home buyer conventional loans out there that have income limits on there, meaning if you make too much money, you can't do the loan product. Another feature I love is that FHA is fabulous for owner-occupied duplex, triplex, and fourplexes. There are some funky rules with that you need to be aware of if you're doing a triplex or fourplex, but you can really get into one of those if you're going to own or occupy one of the units with only 3.5% down, and you get an incredible interest rate on there. Another feature I love is for my realtor partners. FHA is the only program that allows you as a realtor to take part of your commission, if you're doing this for a relative, and not only give it to them as closing costs, but they can also use part of your commission as down payment. And so you can do that personally as a realtor or for a family member. That's a huge feature. FHA also allows for gifting of down payment, closing costs, very favorable in that area. They also allow and are great with working with co-signers who want to help somebody to get into a home. Now, it's been a while since we've dealt with these, with foreclosures, short sales, bankruptcies, but FHA by far is the most favorable loan in helping somebody to get back into home ownership after they've had one of those events: foreclosure, short sale, even a pre-foreclosure or a bankruptcy. So those are really, it's the right place for someone to start in those situations. So I love FHA loans in the right situation. Hopefully this helps you to know which one is going to be best for you, conventional or FHA. I'm always available to visit and help run through scenarios. Let's take a look now at what's happening with interest rates. Today is July 27th, 2022. A big day on rate news because the Federal Reserve just completed their July meetings and have come out and, as expected, raised the federal funds rate by 75 basis points. This had been leaked out last week into the media, so no surprise there. The market hoped and wanted 100 basis points, but 75 is all we got, and indications that moving forward, at least in September, they're going to hold the same course and keep getting after inflation. We are still seeing signs of a recession coming, primarily unemployment getting worse on us. This is kind of the canary in the coal mine. And then we also are still seeing inflation going up on us. We still have an inverted yield curve. And those things all indicate recession. This end of this week, we get the GDP initial readings for Q2 of 2022. And as most of you know, the standard definition of a recession is 2 consecutive quarters of negative GDP. There are other things that go into it now, and you probably didn't even know this, that there is a government agency that officially determines when we are in a recession and calls it a recession. They most likely will not be doing that immediately. There will be revisions to GDP numbers, and by the time they get that all done, it'll probably be next year, maybe next spring, when they make that call that we have been in and are currently in a recession. Anyways, here's our chart. Rates have got slightly better. This is an inverse chart. As the chart moves up, rates get better. As the chart moves down, rates get worse. You can see there's been a lot of sideways movement here with some nice small improvements over the last few days. We've held a really good floor on a resistance line and hope that that holds moving forward and that we can continue seeing better rates for our clients. Have a great week. This is Miles Pitcher with Superior Lending. Please do me a favor and remember to like and subscribe to this channel.